This is Mark Anthony with Mercury Time Price Analytics, and we have a very special video for you today. We're rolling out a new series, literally a new generation of algorithms, which is our Saturn series. This particular algo I'm going to show you in this video is called the Saturn GT40. And I'll tell you, in 38 years of trading, I have never seen anything do what this system does. Now, let me start by sharing with you why we felt the need to develop this system. In terms of accuracy, we quite simply believe that these are the most accurate algorithms anywhere, institutional or otherwise. Now, our systems are built exclusively for individual traders, whether you're a swing trader, day trader, longer term trader. We built these systems for you because we wanted to level the playing field. Right now, about 95% of equity futures trading volume is done by machines. And the job of those machines is not only to make money for the institutions that designed them, but those algorithms are designed to put hooks in the market, to get you wrong-footed, lean in the wrong way. I mean, they're designed to take your money. I mean, that's it. If you're trading these markets, it's not like the old days where you were competing against other traders. Now you're having to compete against very sophisticated algorithms, machine learning algorithms. They get better literally every day. Now, accuracy, we needed to take it up to a different level because not only do algorithms need to be very, very accurate in this market, but they have to be extraordinarily fast. And that's what this Saturn GT40 does. It literally will tell you the key inflection points before you get there. So literally you're ready to act before the institutional algorithms move the market in either direction. Now, let's talk about accuracy for a minute, because the claim I made earlier that we believe these are the most accurate algorithms anywhere, it's not just a claim, it's not just a statement. If you've watched our videos, if you've watched our Twitter feed, day after day after day, the accuracy is just, it's freaky accurate. First things first, if you want to get a hold of me, my email address is markanthony@mercurysignals.com. Our website is mercurysignals.com, and on Twitter, you can find me at MC2085, MC2085. So let's talk about accuracy very quickly, just to set the stage for the next phase of these algorithms, and that is to make them faster than anything else. Let's take a look at NQ. Back on August 6th, before the evening session started, you can go back on my Twitter feed, and I posted that night that the key level to watch in NQ futures was 11,260. So what happened that night? You came up into 11,260. You had a little pullback, tried to take it out again, another little pullback, and then you had a little acceleration move. It ran some stops, and that was it. And then boom. And then it came up again, literally to the tick, and backed off a little bit, came up again, didn't want to have anything to do with price acceptance above 11,260, and then you got this big move down. Well, guess what? We're back into that level again, and we put on a beautiful short into this level on Thursday at 11,252. Frankly, we could have waited till it got to 260. The evidence was overwhelming that it was going to get there, but just in case, we put the trade on a little bit early. Real nice short that was put on to 11,252. Now, prior to getting there, notice that price came up Monday of this week, literally to the tick, to this Mercury band level. Now, the Mercury bands, they're long cycle algos. Now, on ES futures, we recalculate them every night after the 5 o'clock close. So between 5 and 6, we've got our little algos moving as fast as they can to generate those Mercury bands, starting at the 6 o'clock Globex open. NQ, it's a little bit different. We only run the NQ algo for the Mercury bands once a week. We run it on Sunday. And we don't need to rerun anything during the week. The only time that we rerun the NQ algo during the week is if it breaks through either the upper end or breaks down through the lower end of those bands, and then we'll update them. So not only are these things spot on accurate for the entire week, but you're talking about an algo that was run Sunday afternoon before Globex even opened. So here's Monday, you get this move up, stops to the tick at 11,148. Big move down. Now, if you like to play trend reversals, this is the only high probability way to do it, because you can't, if you're of the mind that you want to fade price, you can't just say, well, you know what, this is getting way ahead of itself. I think price is too high. So even though the market looks strong, I'm going to fade it. That doesn't work, especially with NQ. NQ will rip your face off if you're not very patient. So it comes up in here, and what you can do is play a trend reversal strategy with a stop right on the other side when price comes up into these Mercury band extensions. And that way you get instant feedback. You know very quickly if you're wrong, you can put a tight stop. And if you catch one of these NQ trades, well, that was what, 11,148 down to, call it 10,930. I mean, that's a big move. Comes back up again on Tuesday and finds resistance at the same Mercury band. Again, same Mercury band that was calculated Sunday. This is Tuesday. Runs into a problem again. You could have faded that one and had another nice move. Then it comes back up, and this time it stops at this Mercury band. Again, all of these were calculated Sunday before the Globex open. You get a move down here that finds support at the confluence of these two Mercury bands. Then you get a move back up that stops at this XS3 Algo pivot. This was an important Algo pivot from July 13th. It was relevant this week, so it's on the chart. Stop there. Now, when it came back down and couldn't reach this Mercury band here, then you get a slingshot, because when price corrects and it doesn't want to go down to one of these levels, then what you do when you get that move up that takes out that prior resistance, you get one of these moonshots. So when you're trading NQ, if you're not already long on this move back up and over this Mercury band, you can't be jumping into short this. You have to be very, very patient. And so if I'm looking to play a trend reversal in NQ, I don't sit there looking at the chart tick by tick, because you have to be patient. So when it comes up into one of these Mercury bands, what I typically do is say, okay, that's fine. I'll look at it again in 15, 20 minutes, because it's typically going to go to the next one. It took out the next one. We didn't take any action. Comes back here and finds support exactly at this Mercury band. And then you come into the next one and it stops again. So although these swings up and down in NASDAQ look completely random, well, they're actually very precise algorithmically if you have access to an algorithm that does this. And our members have access to it. And a lot of our traders, our members trade ES, but we've also got quite a few that trade NQ, and they're crushing it in both directions. Now, here's the point. He came down here several times, found support at the algo pivot right at this price, which was right at 11,100. Now, here's where this short was just tailor-made. You come up here and take out this Mercury band, this Mercury band, and you come back up into our old friend 11,260, which it is demonstrated it is not comfortable trading above. So that was the short entry with a tight stop on the other side. You get a beautiful move down. But the point is, before we get into the way we tuned our algorithms for performance, I just wanted to demonstrate for you, if by chance this is the first of our videos that you've seen, how accurate they are. Now I want to show you another example with ES. These are the Mercury band levels for ES, and again, the ES Mercury bands are recalculated each evening before the Globex Open. So these are the Mercury bands that we put out on the night of the 11th for that night Globex and the following day session. Now, the most important level we put on here was 33.19. Well, why did we think that was so important when it wasn't trading anywhere close to it? You're going to see in a minute. Now, the Algos also put out this level up here at 33.96, which I was reasonably certain we weren't going to get to, so kind of mark that one off. That leaves you with key Mercury upper extensions at 33.68, 53, 38, and 19. Okay, got it? 68, 53, 38, and 19. Let's take a look at what happened on the 12th. And again, these levels, these algo levels, are put out for our members before Globex Open the night before. They apply all throughout Globex and the next day session. In this case, the 12th. All right, so here we go. You had a move up into 79. This was a key level from February 20th. It's a key level. Remember February 20th, futures traded up to the all-time futures high 33.97. When it started to fail, this was a key level at 79.20. So we had identified this also before the day started. Now remember those key levels we talked about, 68, 53, 38, and 19. So when price couldn't trade above this level, and this was identified for our members before the day began on Tuesday, then you come down here, you break through the daily bull bear pivot, and you come down to where? Right about 53. You find support and you come back up to 75. Now, I mentioned 68 was another key level. 68 is right about here. 68, when it traded back down through it, that was the late afternoon breakdown, and then you get this. Oops, I did not mean to do that. There we go. Sorry, folks. So you come back down, you break this level, and this was that key 53 level where it had found support earlier, and you continue to come screaming down. Now, why was the 38 level so important? Because our Mercury algo regression line, price found support on Monday after a little push down through this regression line. So you take that level and you draw a horizontal line, I call a vector. You take a vector from the price where NQ came down, interacted with this algo regression line, and guess what? It's right in this area, 33 to 38. Now, this Mercury band was right on there. So you had a couple things happening here. You had price come down through this regression line here. See, these regression lines are angled. So what was a key point or a key level for that regression line on Monday, well, it's constantly moving up because the regression lines are based on time and price. Here's the thing about time and price, and I don't want to get too far off the subject. If you followed any of W.D. Gann's work, and by the way, this entire system was built without consulting anybody else's work. Only after these systems were built did I go back and study Gann's work, and, well, I'll let you decide if we nailed the same time cycle. Look, here's the thing about the time cycles. There's only one set of time cycles. Gann found them. I did too. Now, we've added some wrinkles, and I am in no way comparing myself to W.D. Gann. There will only ever be one W.D. Gann for a number of reasons. One of those reasons is that what I'm able to do today with an understanding of these time cycles, but what I'm able to do today with a computer, W.D. Gann was doing with a piece of graph paper, a pencil, and a ruler. So Gann is the man, and he always will be, and there will never be another. There's never going to be another Babe Ruth. There's never going to be another Muhammad Ali. There's never going to be another Michael Jordan. To trading, there will never be another W.D. Gann. So I just want to be very clear about that, because we have had we've had a lot of questions that folks have messaged me on Twitter asking if this is based on GAN. It's not based on GAN. It's 100% original. But again, the fact is the time cycles that the institutional algorithms work on, there's only one set because there's about 7 or 8 key time cycles. They're all related to one another. And either you have them right or you have them wrong. You can't have some of them right and some of them wrong and have this level of accuracy every day. So you had this move down below the key 53 level we identified the night before, below the 45 level we identified the night before, through the regression line, through this 38 level, and here's the punchline. Where did it stop? It stopped within less than 1 tick of that 3319 level that we had provided for our members the night before. All right, that's not a coincidence. And to take to take this one step further, on this particular day, our algorithms identified the high and the low, which happened to be 60 handles apart, before the trading day started, nailing both the high and the low to within less than 1 tick, not 1 handle, less than 1 tick. All right, you can't make this stuff up. And all this stuff is time-stamped. It's on our Slack channel. Every one of these things, let's see, is in the charts data section, all time-stamped. So if we were to go back here to, and this is what our members have access to, scroll back, and is that it right there? Same thing, time-stamped, 6:59. And we try and get these out before Globex starts, but sometimes they're a little bit more complicated to run. But the point is, this was put out 6:59 the night before these levels were met. Okay, so one other thing I want to share with you from the trading we got towards the end of the week. The Mercury bands we put out in the evening. In the morning, I run a separate set of algos, and these just pertain to the day session. We run these about an hour and a half before the day session opens. Now, we don't put all these levels on the chart. I mean, you would drive yourself crazy. But there's about half a dozen of these key levels that we put on the chart for our members each day. So when this algo is run in the morning, again, it's run about an hour and a half before the market opens. One of those key levels is always the backtest pivot, the trend confirmation pivot, and the daily bull bear pivot. All right. So for Friday, the backtest pivot was 33.56. Now, I mentioned before the day started that if we saw some weakness, that was a key level that that our members wanted to watch. Let's take a look at the chart. Now, you came down here late in the day, exactly to 33.56. And by the way, let me share this with you also, folks. After we run the Mercury bands, we post the dynamic pivots. The dynamic pivots are the ones that come out in the morning. The dynamic pivots are the ones that have these funky names. Because a CTA who was testing our systems middle last year, well, he was testing our automated algo. We have an automated algo that automatically gives you the long short entries. And he gave me a little project to work on. He said, why don't you come up with algorithmic pivot levels, not the oscillators that trigger the long and short entries, but just something that identifies the key pivots for the day. I said, no problem. And then he said something that was kind of strange. He said, and what I want you to do is give each one of those levels a descriptive name that identifies in advance the behavior that a trader can expect when price gets to that level. Now, that was so crazy stupid, I figured, why not? I mean, it's nuts. Tell me ahead of time before the market opens what algorithmic levels are important. And oh, by the way, while you're at it, give each one a name before the market opens so we know what type of behavior to test. So the back test pivot does exactly what it's supposed to do. If price comes down, it should stop at the back test pivot, and if it doesn't, then below that you have a trend change warning pivot, and if that doesn't hold, you have an acceleration pivot. So there you go. That's where these funky names come from. But in the morning when I put this out on the Slack channel for our members, what I also do is take these key levels, not all of them, just the most important ones, and I do what I call a chart overlay. So our members also get this pre-open. So you can see before the market opened, this backtest pivot at 33.5604, that was provided for our members. So you get this stuff before the market opens. So that's the backtest pivot for Friday, 33.5604. And here's your afternoon low to the tick, 33.56. Bingo. Now, just to add another layer of accuracy, these are the Mercury bands for the night before. And off to the side here, I put these three levels. Now, these are from February 20th, and if I have time to do a weekly report, I'm going to try and get a weekly report done this evening, because what we're seeing this week in the market has huge similarities to February 20th. Now, why is that important? Well, February 20th, again, was the day you had the 33.97 all-time futures high. And if you go back on the chart, after it hit 33.97, it got ugly. I remember there were a lot of people on the financial news channels saying, wait for 3,400 and then take some off the table. Seriously. Okay. I was telling our members all week, this isn't going to 3,400. There's too many people waiting for it. The algorithms know there's too many people waiting for 3,400. They're going to reverse this thing before it gets there. And what better way to entice them than to get within three handles at 33.97 and take it lower. So when I put this out on Thursday evening of this week, I pointed out these three key levels, 79.25, 71.75, we'll just call it 72, and 59.25. So remember those levels, 79, 72, and 59. So let's go back to the end of day chart for Friday. So 79. You came up into real close to 80. Now, this was Friday morning at 2 o'clock. Those Mercury bands were put out right around 6:30 on Thursday evening. So it wasn't trading anywhere near this when those Mercury bands were put out. So that upper extension level was 79. So it did 78, okay, within a handle of the level we identified. And then on this move, it did just a couple ticks over 80. Well, we said 79 was the level. You came within one handle of 79 on this move up. You overshot it by one handle on this move up, and then you get this. So 79 was a big time upper extension failure level that we identified ahead of time. Now let's talk about 72. After you had this big move down, where did it run into a problem? 72. Sat here from 11 o'clock until 2 o'clock and did nothing. Now, when you see the market doing nothing for several hours in the afternoon, you got to ask yourself, well, if there's a bid under price, well, why wouldn't it push higher? Because what they had was a market on close to sell imbalance. And so what they did, and quote unquote I'm not talking about conspiracy theories, but the market makers and the exchange are there to maintain an orderly market. And so at 3:50 in the afternoon, that's when the market on close numbers come out. But they know in the afternoon what that flow is going to be like, and whether it's just going to be a little bit of an imbalance or a big imbalance. And if it's a big imbalance, they have to pair that price off. They have to pair that risk off ahead of time. I don't know what the market on close imbalance was, but pick any number you want. They can't wait till 4 o'clock on the nose to let all those sell orders get processed. So when you see this in the afternoon, and a couple days earlier in the week, we saw the same thing. I told our members all afternoon, you may get a little push higher to run some stops, but then you're going to get one of these. And so we were short at 70, and we took profits all the way down. But it came right down to the backtest pivot. So took a little bit longer to flesh out that whole thing about accuracy, but I never know for folks that are watching these videos if this is the first one you're watching or if you've seen 10 or 20 or 30 of them. So I just wanted to show you chart evidence of how insanely accurate this system, the Mercury system, is. So let's move on to our regularly scheduled programming. So our Saturn GT4 Algo, you know, the holy grail for traders, and this is one of the things that made Gann the best there ever was at this. Gann could tell you on his charts, not where price has been, but he could tell you where it's going. Well, that's what we do. You know, the reason we put out these Mercury bands ahead of time, the reason we put out those dynamic pivots ahead of time, is because our algorithms are so sophisticated that they can tell you the key levels that price is going to. Now, this I like even better because this shows you in real time how the day is trading, where those key inflection points are going to be. So let's break this down. Now, what you see on the screen, these oscillators, these are the GT40, the Saturn GT40. Now, you still have overlaid on here from Friday the Mercury bands. But what I want to get into is these oscillators, because the oscillators are a second derivative algo of the Mercury bands and some other things. But where it really gets interesting is when you start looking at third derivative. And what I mean by third derivative, these oscillators are already a second derivative of time and price. Where you get to the third derivative is by looking at the peaks and troughs and crossover points of the slopes themselves. That's the third derivative. And that's where it gets scary accurate. So we're going to look at a couple of days on the chart here to give you some examples. This move here, we knew with this system, which has been in development for a couple of weeks, when price came up here on Friday morning, clearly on an algorithmic basis, this was likely to fail. Why? This cyan dashed line is the fast oscillator, and you can tell it's the fast oscillator because it moves around the most. Now, on this move here up into 3380, and we'll just use the last two digits, this move here up into 80, the peak of the fast oscillator is right here. On this move up into 80, it didn't get close. Now, that only looks like a couple of handles, but algorithmically, that's a big deal. So that tells you that price trading above 80 at this point, algorithmically, it's much weaker. Okay? So when price comes up here and comes back down, there's a couple of metrics you can look at. You can take a line and draw it from the top, the peak of this oscillator, and draw it over. So you can see that's where it broke down. We'll take the crosshair here, and we'll just move it down so it lays right on top of the crest of, or the peak of that oscillator. So you can see when it came down through about 76, that presented a problem. Now, the other thing you can do is take this little sideways consolidation. Take a vector, and again, all a vector is a horizontal line driven off one of these oscillators. Take a vector from right here where the fast oscillator is going sideways and put that over here. Well, that gives you about 73. Now, here's another way you can draw these. Here you have the peak in the fast oscillator. Here you have the trough for this little move. You can take a vector and put it right where the bottom, the trough is, and that gives you a price of $69.50, $69.75. So you could make these as aggressive as you want. You could call that the failure there. You could put the line right here. You can put it here, or you could put it underneath there. Any way you look at it, it's a short entry. Now, the math, and this is one of the things, refers back to what I mentioned earlier. If you get one or two of the institutional time cycles right, you can build something that's accurate some of the time. If you get all of the time cycles that the institutions work on, if you know all of them, exactly what they are, then you can do what this does, because then you can build an algo where every component is mathematically tied in to all the others. Let me show you some examples of that. Right here, we've got the confluence of two of the time price oscillators, the solid white one and the cyan dashed one. And that's right here at about 33.70. Well, where do you get this crossover down from the fast oscillator through the yellow one? Same price. It's right at the same price. Now, when price comes down through the fast oscillator, the white one and the yellow one, where does it find initial support? Here at the dark blue one. And when it checks back, where does it stop? To the tick at the yellow one. You see, the math, like I said, the math in these oscillators, they're all tied together. Because if you get all the time cycles right, you can do that. And so not only does price methodically go from level to level to level, your fatal back test is going to be at a very specific level as well. And then you come down and you break through this oscillator, and you break through, and here's where we're tying multiple disciplines together. We've got the algorithmic time price oscillators, we've got a regression line, and we've got Mercury bands. And by the way, the best description I can give you about what these regression lines are and what they do, and that is the fact that time is both circular and linear. Now, it seems obvious that time is circular, right? A clock is round. We have the same number of hours, minutes, and seconds every day. But time is also linear. Time continues to march on. It doesn't stop. It doesn't go backward. Think of space-time. Space-time is linear. The universe is still expanding, and it won't ever stop expanding. The math in these algos is not rooted on something as simple as the time cycles that the institutions use. Because you have to go back further and ask yourself, well, where did the institutions get those time cycles? They got them from the physics of time, space-time. The same mathematics that govern space-time, gravity, pressure, the elliptical movement of planets, it's the same math that you see in these algorithms. Long before humans lived on Earth, there was time. Long before humans lived on Earth, there was math. Math and time were simply constructs that humans developed a couple thousand years ago. But it doesn't mean that a few thousand years ago, when man first had a concept of time and math, doesn't mean that's when they began to exist. They began to exist at the time the universe started. And so when you apply physics and cosmology, you get immutable time cycles that existed from the moment the universe was created. You see how profound this is? And it's not just cosmology and astronomy, not astrology, astronomy. But it's not just cosmology and astronomy. This same math exists in the periodic table of elements. If you know the right elements to look at, there is the same mathematical relationship in those elements that you see in the planets. Now, why is that? Well, the same elements that are in the periodic table of elements are in the planets. Not all of them, but certain ones. And if you look at certain elements, you get the same math. So you can't make this stuff up. And more than anything else, I want to share with you that the majority of canned black box trading systems are crap. They're crap. I know that's a bold statement, but they're crap. Why? Because if you don't build an algorithm based on these time cycles, these are the time, again, ask yourself, if these are the same time cycles that the institutions use, and they can't be anything else, so they wouldn't be this accurate, right? Institutions move the market. Institutions have algorithms. If this algorithm finds the same spots where price stops or gravitates to and from, up and down, well, then it has to be the same. Well, where do they get it from? See what I mean? But many of the systems that are marketed to traders, what they'll do is they'll curve fit. And by curve fitting, what I mean is they'll play around with numbers and they'll find something that works over a specific historical period of time. And then they'll market it to you saying, our system had such and such % performance over such and such period. Wonderful. How did it perform against every other period? They're not going to show it to you. Show me how your system worked over every time period. This system was tested over a 30-year period in 6-month chunks. So over a 30-year period, how many 6-month chunks do you have? You have 60. This system performed with an amazing profit every single one of those chunks. And the worst performance in any one of those 6-month chunks was triple digits. I'm not going to tell you exactly what it is, but it was well over triple digits on a one-lot ES contract. Okay, so I'm getting off the subject, but I get a little riled up when I see some of the crap that's being sold. Because guess what? If you try a system and it stinks, not only did you lose the money that you paid for the system, because you're not going to keep it if it doesn't work, but on top of that, you lost who knows how much money in your trading account. And, you know, if anybody has a system that they think works and you want to send it to me, I'll look at it. It's no different than when Houdini would tell you who the shysters were. You can tell this makes me feel a little uncomfortable. I don't like getting into it, but I'll tell you what, I care more about your feelings than I care about hurting the feelings of the idiots who are peddling some of this crap. All right, so enough said. Now, I mentioned everything was tied together before I got on my little rant. So let's take another spot. So you have this spot here where the cyan algo crosses through the white algo. Well, it's right here. Where did this run into overhead resistance? Right there. Again, draw a vector. Now, the reason that I built this system was because the market is moving really fast, up and down. And when the market gets exhausted like this, the way we've been playing it is every one of these rips we're selling into. And so, for example, this past week, we crushed the short side. But I want more than that for our members. I want to be able to pick up these areas where price finds support and you get these nasty short squeezes. And that's what this system does. So let's follow this move down through. It comes down here into this Mercury band and it finds support. Now you can see what the fast oscillator did. It came down at a very steep angle and then it turned back up. So when it came up here into this resistance, that wasn't a spot to short, because you've got this fast oscillator coming up at a very, very aggressive clip. So price comes down here, and where does it stop? It stops at the confluence of that regression line, the blue one, and the algo pivot that we identified the night before. You got double confirmation. So when you see it come down and stop here, what do you get? You get a 10 handle spike bar higher. Now, where did it stop? It stopped right here at the same yellow oscillator where it broke through here and failed the back. So it failed a back test here. Failed the back test here at the yellow one again. So it comes down, and guess what? It doesn't want to go down and test this level again. Remember what I said earlier? If price goes down to an algorithmic level, and then on the back test it doesn't want to go down there anymore, guess what? It's going to slingshot higher. Same thing when price gets up into an algorithmic level. And here's an example of it. Price came up directly into this regression line. Now this time, it didn't quite get there. And it was only off by a handle. But again, in algorithms, that means a lot. It means it's exhausted. And when it's exhausted, it doesn't matter if it misses getting to this regression line by 1 handle, 2 handles, 3 handles, or 5. It doesn't matter. It's exhausted. And then you get one of these. So when price comes back here after you have this fast, aggressive turn up in the fast oscillator, it comes back down. It stops at the purple algo, doesn't go back down to where it was, and it comes back up. So where is your chance to buy on this back test? Right here. This bar started there, probed a couple handles lower, and then it came higher. So, you know, would I have taken that long? That would be a tough long to take after you saw this. But the point is, you still could have taken it, because the way we advise our members to trade is as soon as that trade gets 2 to 3 handles in the good, you take your first third of profit and you either tighten up your stop to even, or at the most you give it 1 handle on the other side of where you entered. So that way, let's say you take a 2 handle profit on 1/3, and let's say you were long here. And on the remaining 2/3, let's say you didn't put your stop at even, you put it 1 handle below. Well, if you get stopped out of those other 2/3 at -1, you've lost 1 handle on each of those two. You'd already booked a +2 on the first third. It's a scratch. So you could have tried it here. I mean, the algos were telling you there's a chance it was going to go higher, and it moved up enough from this level at 66 to 72 that, you know, you get your 2 or 3 handles, you book your third. Now, where this really gets interesting is when we work backward. And I promise you, I will do my best not to get sidetracked, because we've been running longer than I wanted to on this video, and I still have some really cool things to show you. So now let's work backward. You had this move down here that came down through this algo, stopped precisely right there. We'll take the chart back a little bit, and we'll look at Thursday. Now, what metrics do we use on Thursday? Well, we use the metrics that the algos gave us the day before on Wednesday. Let me move the chart back just a little more so we can see Wednesday. All right. So, Wednesday, we'll go back. Here we go. So price comes up, moves above the regression line, and comes back down, goes down into the yellow oscillator. Now, the important point here is this. This level right here is where it found support, and it also found support a little bit higher. But if we go back to this point here, look at the price level that yellow oscillator was at here, okay, when it put in this low. And look at the price level it was at this low. And look at where it's at here, and then look where it's at here. So you had 4 little back tests, all within a couple of handles of each other, But you've got this yellow oscillator, which moves a whole lot slower than the cyan one. That tells you that there's momentum that's building underneath price. And so when you get this move down finally to here, it finds support. And once it moves back above these oscillators, there you go. Now, again, third derivative. Let's take this spot right here where the fast oscillator goes sideways. Well, you can see where the crosshair extends out to. So we'll put this right over where it goes sideways. So once you have these back tests and it comes up through that, then you get that extension move higher. Now again, that's a risky long to take when it's this extended. So let's go back over here and look at it, because this is the one that really interested me, because you know you could make money playing risk reversals, selling into these rallies all week. But this algo was developed to work very, very quickly, very aggressively, so that not only you can catch these shorts on these oversold rallies in a market that's very, very tired, which is what gives you these, but you could also catch these really nice rips, because after you get these pushes down, all week long you're getting these fast rips higher. Now, let's start here, and then we'll look at how to get long right here. Go back just a little bit more. And this sequence here over Tuesday and Wednesday really makes the point, I think, of how powerful this is in helping you get in as early as possible. So you get price move up here into 80. Here's the peak in the fast oscillator. Comes down, have a little trough, comes up, goes sideways, doesn't go lower than that trough, comes up here and starts to roll over. So where would be a good spot to get short using that third derivative of the slope of the algorithm compared to itself? Well, it's right here underneath this little trough. And so right there, price comes up right above 75. You've got a lower low in the slope. You got a lower low here and a lower low here. And if we drew our, and forgive me, I've been losing my voice the last couple days, but if you put the vector right underneath this spot here, well, that's your spot to get short right there. And where does it stop? As I mentioned earlier, if price doesn't hold at one of these algo oscillators, it's going to the next one. And if that one doesn't hold, then it's going to the next one. And here you finally got support at the confluence of the white oscillator, which is a really long cycle. And also, by the way, it stopped almost to the tick at the Mercury band. So when you put all this together, the oscillators, the Mercury bands, and the regression lines, I mean, it's very, very powerful. Now, how would you play this rip higher? Well, first of all, you don't try and, as they say, catch a falling knife and get long here. Yeah, this was support, but this could have been support here and it wasn't, and this could have been support here and it wasn't. So you have to have confirmation before you try to play what at this point would have been a counter trend move back on the long side. Well, let's look at where the opportune moment to get in happened. Now I'm going to give you a couple of them. One of them is right here. You have a little very subtle pause right here in the oscillator before it turns down lower. So if we take a vector and we put it right there and bring it across, you can see that's where that accelerated. Here's another way, because there's so many re-entries here, it's ridiculous. Remember what I said earlier, if you lose an algorithmic level and you regain it, you're going to have a slingshot higher. Now the first back test, you never want to buy the first back test into these fast oscillators after a move down like this, because you saw what happened. I mean, it just got pushed right back lower. But then finally you get the trough in that fast oscillator and it moves back up. You get the move back up here to the Mercury band, move right back down to the oscillator, and there you go. Well, let's say you didn't take that one. What's really interesting is up here, because when you get what I call algorithmic clusters, and an algorithmic cluster is when you get multiple oscillators at the same price. Well, what you do when you see these clusters is you just observe, are they trending up? Or are they trending down? Well, here you have a cluster, and all three of these, the white, the yellow, the blue, the yellow, and the white, they're all trending up. Not to mention the fact that you've got this really aggressive upward move in the fast oscillator. So if you want to wait for the highest probability long re-entry, I mean, you could have got back in here after it came back through the white oscillator and settled back down here, purple, and then took off. But this is the really high probability one, because you wait for that first decent correction. Because what makes this work so well is not just that you have this algo support with these clusters, and not just that you have this fast-moving oscillator that's going to tell you if it finds support here and goes back up, that it's really going to move. But what it's also going to get you in on is to be able to take advantage of a bear trap. See, one of the things that'll get you run over in a market that's making these fast alternating moves down and up and down is recency bias. And by recency bias, what I mean is you saw this move down, and then you're thinking the next time it gets back to these levels, it's going to fail again. Well, it didn't fail. It just came up into resistance right at the spot where you had the algo cross right there. So that was the overhead resistance, because these algo crosses are really powerful vectors, really powerful. So you take where the white cross, or the cyan crosses through the yellow right here, draw a vector over from there, that gives you this. So when you got this move down, it comes down right into this algo cluster. You get this spike bar up, and then you just wait until it settles down again into this oscillator, and then it's gone. So it settled down into the algo cluster. You saw the spike bar, meaning it wanted to try and go higher, and then it does a little sideways, finds support right there. It just snugs right down into the consolidation of this oscillator, and then boom. And see, you didn't have to try and pick the bottom here, because right here, after you got the pullback into the cluster, even if you waited for all this confirmation and you got long on this back test here, well, that's 53, and you had a 30 handle pop. So that's what this algo is designed to identify. It not just identifies where to get short up in here, but it identifies multiple places to get long for that rip where they're going to take it higher. Let's look at one more. All right, so here you have Monday and Tuesday. Monday, and actually we need to go back a little bit more so we can see the day before, because what you're doing is you're taking these entries based on the information that the market gave you the trading day before. So here you can see these two algo oscillators coming together right there. Okay, and you can see the price. So we'll put the crosshair right here where they come together, and you see over here, I'm such a knucklehead, I was about to point at the screen as if you could see that, right? So see this price right here, and follow the crosshair extension to the left. It comes in right there. So you have price come down to not only where these two oscillators come together. But again, here's the regression line. And remember what I said multiple times before. When price goes through a regression line and then moves back the other way, you get then there's a number of reasons for that I'm not going to go into right now. But price goes through a regression line and then goes back. It's like a bungee cord, and then you get this kind of move. But what's interesting is right here where you have the blue oscillator, that's also the top of this. So you see the little top of the slope here? You come down, you lose it. So just based on the slope of these oscillators, after it moved up here, where's the last support based on these slopes? It's the last peak right here. And that comes right across directly to here, where you've not only got this really slow moving oscillator that's moving up, but that's also where you get the Mercury band. You have triple confirmation that after it does this, if it comes back up, they're going to squeeze it higher. Now, as if triple confirmation isn't enough, you have quadruple confirmation in that it couldn't get down to this next oscillator. So see what I'm talking about here? You can use these fast oscillators using the peaks and the troughs. And same thing here. Where did it break down? Right here. It broke down right there at the peak of it. So the oscillator didn't go any higher. It started to weaken a little bit, even though it's going sideways. You can see it's starting to weaken. And it comes up here, and the oscillator can't make a higher high. And so right in here, there you go. It breaks, goes through that oscillator, that one. Can't get to this one, which that tells you if you're short right here, if you were short anywhere in here and it can't make it to this next mathematical algorithm, well, then it's time to start taking some off. And when you see it come back up and go through the regression line, it's time to take more profit on the short. And when it comes back up through this upsloping, really long cycle, this dark blue oscillator, which, oh, by the way, meets price at the confluence of this Mercury band, at that point, you got to cover your short, and you're either flat or you're getting long again. So to sum it all up, and I appreciate your patience through my little rant in the middle. But I'm really concerned. I'm really concerned about the kind of stuff that's being peddled. Because what I saw this week is, if you go on Twitter, for example, and you look at the hashtag Algo trading, all of a sudden it's trending. Okay. That means either one of two things. Actually, three. It means either one, the institutions just decided all of a sudden that they're sharing their algorithms with individual traders like you and me. Well, cross that one off. Two, all of a sudden a bunch of people figure they can make money peddling algorithmic systems. And three, you've got folks that are buying into this stuff just because it's got the word algorithm. Unless someone can show you day in and day out, week after week, month after month, chart evidence that their stuff really works, you might want to think twice. So let me just leave you with this. If you haven't been to our website, mercurysignals.com, you can find it at mercurysignals.com. Chart of the day, I'm a few days behind on that. But if you want to see all the charts I've posted, over the last week, I've probably got more than 10 charts a day that have been posted on Twitter. If you want to check out our subscription rates, right now you can use promo code 40. Click on subscriptions. It'll show you what the current regular rate is. We bill bi-weekly. So when you click on subscriptions, it'll show you what our regular bi-weekly rate is. So that's the rate that our members pay every 14 days. If you use promo code 40, it'll take $40 off your first 2 weeks. So you can literally try our systems, all of our systems, for a couple weeks for literally a little bit more than one E-mini handle. It's a little more than $50. You can try out our systems for 2 weeks. That's insane. And the cool thing is, we don't a la carte any of this. Everything that we do is included. For example, for our existing members, this GT40, this Saturn GT40, this is literally revolutionary, even by institutional standards. And our members get it with no increase in price, because one of the cool things we do is we never raise rates for existing members. So hypothetically, if you try out our service, and I say hypothetically because I'll leave it up to you. I'm not going to try and sell you on anything. I think these charts and these videos speak for themselves. But hypothetically, if you try out our system, you get everything that we offer, and you get a lifetime rate lock. So let's say, hypothetically, you enrolled this weekend to try out our system. And hypothetically, next week sometime rates go up. That will never affect you, ever. Your rates will never go up from whatever rate you joined at, because we give our members a lifetime rate lock. So prices will go up in the future. That'll never affect existing members, ever. Nor will we ever take anything away from existing members. So all the stuff that we offer, we're never going to break that up into smaller pieces and have, unbundle our service. So when you join, everything that's available for you is always going to be available for you. And we've got something coming, maybe as soon as next week, although I can't promise. We're still working on a couple things. But if you're more of a long-term trader or a swing trader, this Saturn series of algos, in addition to the GT40, which is fast as all get out, we have a longer-term swing trading, and even longer than that, it's swing trading to kind of intermediate long-term trading that does things I've never seen before in 38 years of trading. Now, by the way, this GT40, I like to have a little bit of fun with the names. And if you've been to our website, one other thing about our website, I encourage you to click on the market reports, and that will show you all the market reports. I don't do them every week because they're really time consuming. And, if you want a market report, you can just go to my Twitter feed and look at all these charts I post every day. I'm going to try and get one done. So these are not put out every week, but just take a look at the one we wrote last week. But I like to have a little bit of fun with the article names, and I pick song lyrics to tie in with the title. This title from last week, the one I wrote last Saturday, Green Grass and High Tides Forever, that was to communicate the fact that there is so much complacency in this market. I have to tame these pop-ups. There's so much complacency in this market. And the chuckleheads on TV, on financial news networks, are, telling you what? Expect a V-shaped recovery in the economy. Don't get out of your longs. Maybe take a little profits, but we expect not we as in our company, but they'll tell you, we expect any pullback to be moderate. There's a ton of liquidity. Don't worry about it. Let me tell you something, folks. While these idiots are telling you on TV, and there's some very good people, Muhammad El-Arian, when he's on TV, watch him, listen to him. When Scott Minerd from Guggenheim is on, listen to him. There's a number of people that genuinely have your best interests at heart. What I'm talking about is the people that are on financial news to peddle a product or to push whatever, they want to sell back at the shop. Here's the point. because a lot of those folks are on those financial news channels and they're telling you to buy, while back at the shop, they're selling into the pops and these stocks and these indexes. But you've got a log of all of these in that section. Go back and read this. Go back and read what I wrote last week. And I'll tell you one other thing. Can the market go higher from here? Sure, it could. The market right now is very confused. And it's not just that the market's confused, the algorithms are confused. Because I can always tell when we're getting to these key turning points, because the algorithms literally start fighting with each other. You see, normal circumstances, you know, the big banks, the large institutions, the hedge funds, the risk parity funds, they've all got algorithms. And under normal circumstances, the high frequency trading algorithm, under normal circumstances, it's the job of those algorithms to take your money and my money. But you're going to always tell when we're getting to a key potential turning point, a key inflection point in the market, because the algorithms start getting, the numbers start getting really messed up. Why is that? Because the algorithms from all those entities, they're fighting with each other because they're all trying to trim exposure at the same time. So could we go up another 50, 100 handles from here? Sure. But the risk reward at this point, it's very, very dangerous. And so if you've got nice profits in long positions, I'm not here to give advice. I am not a financial advisor. I work with math and algorithms and physics of time and price. I'm not going to give you advice other than to say that taking a little bit off the table, tightening your stops, implementing hedging strategies are never a bad idea. All right. So consult with your financial advisor. I'm not here to give you advice, but just in the abstract, trimming some positions, taking some profits, tightening some stops, implementing some hedging strategies is never a bad idea. Okay. So with that, we're going to wrap this video. This video went about 3 times longer than I intended. We thank you so much for being here. You know, we really would like to get word about these systems out via word of mouth. Feel free to share these videos with your friends on social media, anybody who's interested in trading, and even people that you know that are long-term investors. Have them go to our website. And I'm not looking to sell subscriptions here, but if you've got family members that have long-term investments, again, I'm not here to give financial advice, but have them go in and read these reports and let them know now would probably be a pretty good time to schedule a meeting with their financial advisor. Because this market right now is as dangerous as anything I've seen. What we saw in the bond market this week, what we saw in the yield curve this week, while the chuckleheads are on financial TV telling you a V-shaped recovery in the economy, buy the dip, any move lower in the market is going to be brief. That's not what that's not what the bond market's telling you. And I didn't plan on getting into this, but this is the 10-year Treasury. As Alan Greenspan rightly said a long time ago, the U.S. 10-year Treasury is the most important financial instrument in the world because so many things are priced off of it. Now, if you're at the Fed, put it this way, if you're watching this video this weekend, I think it's safe to say that the folks at the Fed are working overtime this weekend. You can see the yield curve, because here's the problem. It's not entirely problematic when you get a sharp move lower in rates. Depending upon your perspective, you might think that's a good thing. I mean, if you're getting a new mortgage, that's a good thing. What's very problematic for financial markets is when you get historic lows and then you get one of these. That's not good. That means the bond market is getting worried, and they should be, and they're demanding higher yield to take risk. This right here, this isn't a green light to go crazy ballistic bullish on equities. What this is a flashing red light, banging gong, sound the red alert, notification that, again, I'm not here to give financial advice, but that chart is screaming, maybe a good time to trim some positions. Trimming positions, tightening stops, protecting your downside, implementing hedging strategies is never a bad thing to do. This is a problem. This is a problem. When you see this, typically within 60 days, you're going to see plumbing problems in the banks again. I hope it doesn't happen. I pray to the Lord it doesn't happen. But this should put you on alert. All right. And with that, we're going to wrap the video one last time before we go. Website is mercurysignals.com. Email markanthony@mercurysignals.com. You can find me on Twitter. And lastly, I do not know how long they're still going to be offering that promo code on our website. It's promo code 40. I don't know how long they're going to continue to, because I let my family decide when prices are changing, when these offers end. I do know they had a limited number of these promo codes that they were going to accept, and then it was going to go away. But I specifically told my family members, my wife and a couple other family members, that y'all make those decisions when rates change, when promos end, because I don't want to know. Because I don't want to get on a video and be one of these knuckleheads that says, you better sign up now because rates are changing. They may be, I don't know. I do know they are getting a little bit low on the number of these promo codes available. And look, there aren't any contracts with our service, so if you try out our system for 2 weeks, you can cancel after 2 weeks. But more than anything else, we appreciate your time. God bless you. God bless your family. Hope to see you again soon.